Oil prices have been standing still in the area of $121 per barrel for the third day in a row. Given that the macroeconomic calendar is bereft of significant releases and major fundamental events, it comes at no surprise. Moreover, market participants are awaiting at least some results of the European Union's attempts to find alternatives to Russian energy supplies. Traders are skeptical and doubt that it's possible. In addition, investors are waiting for the outcome of the European Central Bank's meeting to be held tomorrow. If the regulator announces the timing of its first interest rate hike since 2011, the dollar will start losing value. Given that there is an inverse relationship between the value of the US dollar and oil, the latter will head for $130 per barrel. Until then, the oil market is expected to continue moving sideways. Now let's take a look at the trading chart. Since the very start of the trading week, Brent crude oil futures have been drifting in a range between the levels of $118.60 and $121.50 per barrel. This stagnation is similar to an accumulation process, which in turn may lead to new price hikes. In this case, the best tactic is to trade with a view to breaking through one or another boundary of the current sideways range. Judging by the dynamics of gold over the past couple of days, it feels like the yellow metal is about to enter a sideways range limited by the levels of $1,840 and $1,850 per troy ounce. However, the outcome of the ECB meeting will most likely have a negative impact on gold. Higher interest rates will lead to a spike in the Eurozone government bond yields, and in this case, part of the capital will flow into the debt market. Apparently, investors will start getting ready for this in advance, thus gold prices will gradually return to the level of $1,840 per troy ounce. Meanwhile, the ruble has been trading around 61 rubles per dollar for more than a week. Obviously, market participants are awaiting the decision of the Bank of Russia regarding the mandatory sale of export foreign currency earnings. Judging by the ruble's reaction to recent changes in monetary policy, even a cut in the key interest rate will hardly have a severe effect on its dynamics. The only thing that could steer the market in the removal of the above requirement, or at least its softening. At the moment, exporters are required to sell 50% of their income in a foreign currency, and notably the ruble has halted its bullish run. The Russian currency has clearly exhausted its upside potential. However, it's still extremely overbought and the market needs a correction. Nevertheless, the Russian currency is likely to remain unchanged until Friday. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.